Hey everybody, welcome back to another episode of the Black Book Podcast. Here I have a great guest with me today, a guy who's probably well known in China, especially with Black people when it comes to money, because that's how I got to know this guy from a group chat called Black Wall Street, where he ain't really passing no money out, but he's giving advice whenever he can and everything like that. So please welcome DeShawn to the show, man. And
Thank you for having me.
yeah, man, I was really excited when you hit me up first during the first season to say like you might be down for something like this. I was like, oh man, that's cool because one, I always try to highlight different jobs that foreigners can do, especially in China. And I really should have asked more questions, but I really don't know exactly what your job is, but I got the hunch that maybe you're not teaching.
Yeah.
like most foreigners are. So just first off, before we get started about exactly what your job is, just give us a little background about yourself.
All right. So thanks for having me. DeShawn, born and bred from Detroit, was in Chicago before I came out here. I've been in Shanghai 6 years, and right now I am a independent financial advisor. So I help expats, foreigners in not only the mainland, but just in the greater China region in general. So that means all the territories, Taiwan, even South Korea, Macau, Hong Kong, even if it's worth it, I can go out there to like Japan or something like that. And basically just helping people like me, who look like me from my community, or just expats in general who find themselves making, or I like to say saving more money than expected, and just helping them make mature money decisions.
Okay.
So anything that's under the sun related to money and living abroad, that I'm usually the guy that people come to.
Okay. But so like before going abroad, like were you also in this sort of industry, in the financial industry as well? Or did
No,
something
I was in like sales and development, business development by nature, right? I think one of
Right.
my strongest skills is being very personable with people. So I've always just, how can you say, gravitated towards those people-facing roles. So prior to this, I was just doing a lot of sales and development roles as far as freelancing. Back in the States, I was working for a tech startup that went IPO, and then even when I first came to China, I was just learning how to communicate. So I took for 2 years at university and studied Mandarin. So, and then I was headhunted from one of the recruiters. It was a business development role, and then I just found myself loving the role from a multiple reasons. Really, it's just the learning
Right.
opportunity, right? I think from the moment I started teaching, I won't say teaching, from the moment I started like working in financial services, the one thing I always thought was like, why don't they teach us this in like K through 12? And then the more I pursued it and the more people I come across, I realized that I was not the only person in the room who wasn't as aware of their financial planning as I believed other people were. And then,
Right.
just learning more about money, the dynamics, how to respect money, how to grow money, and generational wealth. So I've been doing this for the past few years now, really about almost going on 4 years, and just been doing it abroad ever since. So I see myself doing this going forward.
Yeah, man. So that's funny that you talk about like the part about like we should have been learning this, or we wish we could have been learning this doing K through 12, because that's something that hit me in the middle of like just becoming an adult and trying to figure out things on my own, like dealing with taxes and trying to find out like which should I put my money into, a bank account, or should I put my money into a credit union, or if I choose either or, which one of those organizations will work best for my money and for me, and all of those things like that. And like school doesn't really like school doesn't teach you that at all unless you like go to school for finance. But clearly, I didn't fucking go to school for finance, So like,
Yeah.
I like everybody else. If you didn't have anybody teaching you, you just learn on the go, right? And sometimes it's like it could be disaster, or it could be like really good, And I think I've had like experiences with both. But like I've made some great decisions with money, but I've also made some terrible decisions with money just because like I didn't fucking know what I was doing, and two, I was just pretty young.
Yeah, I completely wholeheartedly can relate to that. I feel like I'm in my 30s now, right? So I feel like
Yeah.
of all the money I've squandered between college, between my first couple of jobs, and even up to the point where I started doing this, I feel like it was a matter of just education. Not saying that I wasn't making the right amount of money. It's just the education of here's what an emergency fund is. Here's why you should file taxes. Here
Right.
is what a retirement plan is. And here's like an 80-20 rule. And it's really just simple things that aren't easy, but more, are just simple in nature. And I'm really just out here trying to help people, be educated from that perspective as well.
Yeah. All right. So you hinted towards like how you got into the role that you are in now. So like let's just back a little bit. So you came out, you said you've been here for 6 years, so that means you've been out here since about 2014, 2015 type.
Yeah.
Yeah.
It'll be 6 years on next week on the 19th, November 19th.
Oh,
It'll be six
okay.
years.
So you've been a full six
Yeah.
years. Okay.
Yeah.
So what
Yeah.
maybe you said this, but what originally brought you to China?
Okay. So I was working at Groupon for a while when it
Okay.
was like the place to be at when I was in Chicago, and I kind of hit a how can you say I kind of feel like a plateau or I stagnated. And
Yeah.
one of the roles or just the opportunities that were presented to me, I felt like this can't be it. So a good friend of mine, we interned together at MTV, and she was Chinese. I didn't think nothing of it. In Chicago, everyone's different. Everyone's different, right?
All
So,
right.
but during this time where my career, I felt was like plateauing, we just reconnected. We got like coffee and just like, and she put the bug in my ear. She was like, "You should go to China. You should travel for a little bit. You should come back, work with me at American Express because she is just completing her degree at Northwestern." And she would say,
Okay.
"Go to China, come back, go to school, go to grad school, and by that time I can just pull you in house and we can just continue to network and et cetera, et cetera." So I really didn't tell anyone about this conversation. I sat on that for about a year personally. I just sat on it.
Mm.
And then one day I just pulled the trigger. So I applied for grad school. I applied to teach English. I applied to study Chinese because I just figured like if I'm gonna be out here for 6 months to a year, etc., I need to make money, but also I want to come out with a skill.
Right.
And from the moment I landed, I was just like, whoa, what is happening? Like I feel like us as Americans, for us, the epitome of relocation is maybe like LA or Atlanta or Miami or New York. But for someone
Right.
to say, go further, go past the coast, go across the ocean.
Absolutely.
And we've always, heard things about China, but I felt like the way the news was reporting it or what the world was viewing was just nothing that I saw. So I came out here, and after that 6 months, 8 months, I just made an educated decision. I was just like, okay, we're just gonna stay.
Right.
And even to this day, I feel like that was probably one of the best decisions I ever made because I'm pretty sure most of us living out here have seen the go-to decisions of people who stayed at home or the people who went to grad school or the people who have done what we thought we should have done.
Right.
But rarely have I met anyone who looked at me or was in a position where I was like, oh, I'm missing out. And usually it's the
Okay.
other end, and they're like, oh, I'm missing out on what y'all doing. And I just
Hmm.
feel like to see the world in the next 100 years is definitely in Shanghai.
Yeah, I can agree with that. I probably go to Shanghai like once a year.
Mm,
I like going to Shanghai, but I gotta be honest, man. I don't think I can live there. Uh,
yeah.
one, I just think sometimes I think the average person, no matter if they're a local person or if they're a foreigner, can be quite rude in Shanghai. But that's just my opinion.
Mm,
You take that with a grain of salt.
yeah.
But dude, yeah.
It's the
So
city.
yeah, it's a big city. I mean, because like I used to tell people sometimes, like like, cause I'm from Chicago, and I like, dude, sometimes
Mm,
like you run into me on the right day, I might just be rude as hell to you. Like just not because I'm like want to be rude to you. It's just because like I don't know. That's just how city people work every now and then. But
yeah.
yeah. But man, so you came out here to China, and then you studied Mandarin at what university?
Donghua. So right here on
Uh-huh.
Yan'an Shilu, the city campus, not the one in Songjiang, not the one far out, but yeah, right down the street. So it was one of the things. A good friend of mine, he's actually coming out of quarantine today.
Mm-hmm.
He just came back from the States. He was one of the people who's like, if you want to stay in China, if you want to really get the experience, you got to learn Chinese. So you're like, you just got to learn it to some degree and just make that investment. So
Right.
I did the summer program, you know, full time, did the fall program, and then like the second year, I did like the part time program and got like a private tutor. So
Mm.
even though now my Putonghua is like kind of shit, it granted me access or that mobility to like travel freely or to like answer questions or not feel like any anxiety about answering day-to-day questions or like conducting like simple conversation.
All right. Now, when you studied, did you just go and study like just Mandarin itself, or did you go and actually take up a skill while learning Mandarin?
Just Mandarin, so just
Just
a full-time
Mandarin.
program.
Okay,
Yeah,
so
it's
um,
really affordable.
I think you said like afterwards you had got an opportunity to work for a financial for a company in finance. But like,
Mm.
what other you know about any other opportunities that maybe could have come your way or were presented to you after you finished those language programs?
I would say for the foreigner, we are in a we're in a pigeonhole as far as opportunity, but the pigeonhole
Yeah.
goes deep. It's a deep pigeonhole, right? It's not a
Right.
wide range. Like
Right.
education is the go-to, right? Most foreigners here are working education, whether it's teacher, administration, principal, coordinator, school counselors, right?
Right.
But for the foreigner in China, your skill or your value comes in where you can relate experience that locals can't. So business development for multinational corporations, um, translation. I won't say finance in general, but anywhere where there's a huge company that's either coming in or a local company that's going out. So I think
Mm.
that if you are working in a company that is appealing to locals, then you'll have a counterpart or a peer who's gonna understand the culture, who's gonna have studied in Canada, UK, Australia, who's gonna have all the degrees, and you just can't compete with. So as a
Mm-hmm.
foreigner, you're going to have to appeal to roles where it's going to be foreign facing, outbound, inbound, and also like mainly a foreign staff, right? So it's
Mm.
not a lot of us, right? So it's less than 1 million of us here in the mainland, and half of that, right, because of COVID. So we have to really look at it from that perspective as what do we offer from a cultural competitive advantage and not necessarily a skill set.
Okay. So, all right. So let's dig deeper into that, right? So,
Mm.
as a foreigner, you just mentioned that, but what about as a black foreigner? Is there anything more specific you can get into about that?
I wouldn't say nothing more specific, but nothing less than the next person. I would say
Okay.
that, but from my perspective in Shanghai, because I'm in the middle of the city, right? So the opportunities I come across are usually from Black people. They work in teaching or education. They work in import export, and those are like maybe out of 10 people, those are the top two. And then you have like a one-off student, and when it maybe somebody's working at like a Ford, GM, and they're here for like a contract.
Right.
So I won't say that the options are limited as much as those are usually the roles I come across.
Okay.
But also things that I also notice is that there's a ceiling as far as scalability, how far you can go up and things like that. So I would say for like Black people or just foreigners in general, you can't go up as high as much as you can go wide,
Mm.
as a way to just present it.
Yeah, I understand that. So, I mean, yeah. So most of your work comes with basically other foreigners and stuff like that. But
Mm.
have you ever done any work with with any local people? Like, have you broken that barrier yet?
No, I can't say I have. I can't say that I don't want to,
Right.
but in my line of work, the regulation prevents it. But also, the cultural barrier is hard. You know, it's a
Yeah.
very thorough barrier, and I think it's not. How can I say this in a way that's even if you're not local, even if you're not Chinese, right? There are so many ways in between that between like Shanghainese and Beijingers, or from Zhejiang to Anhui. But even
Right.
from a international standpoint, I work with a lot of Europeans, and like the British people like to work with British people.
Yeah.
The Italians like to work with Italians. It's really like it's just a certain comfort that you see in yourself when someone comes from where you come from.
Okay.
So it's not to say that I don't want to do business with locals, but I can't. But if I could, I still would find that there's a extra barrier just because that cultural defense is so high.
Right. Yeah. Yeah. That's totally understandable. I mean, like,
Mhm.
there's still a market out here because there are people other than the locals around, which is
Mhm.
kind of what fuels your market. Yeah. So I see, we kind of like met on WeChat. We interact on WeChat every now and then. But
Mhm.
I see that you have your own platform. Would you mind speaking
Mhm.
about that a little bit?
Okay, so I got my own platform. I guess it is spawning to this other thing. It's called Fit Budgets. So
Right.
Fit Budgets is just like the main community of keeping people's pockets fit, right? Because as much as I'm passionate or enthusiastic about finance, I'm equally as passionate about like fitness and physical health and things like that. So I
Okay.
just thought it was a cool way to combine the two. So really, it's just a platform, a website, and everything. Even Black Wall Street is a branch of that. Whereas,
Right.
how can I help people in practical and bite-sized moments educate them on financial literacy?
Right.
Because if you try to get someone like the book, The Intelligent Investor, or if you give them something crazy like read this textbook, maybe they'll be turned off. But if you create a not necessarily platform, but if you try to socialize financial literacy, then it
Hmm.
becomes this natural thing, right? Because the goal of the community or the platform itself is to socialize financial literacy so that people don't feel like if they talk about, oh, I'm in debt, or if they on the other end they say I'm looking at investing in the S&P 500, that shouldn't be an isolated event. It should only propel the community in itself in these constructive conversations.
Mm.
So about 2 weeks ago, we had the spinoff event, Health and Wealth, where we took some vendors from Shanghai community who are all about health and wealth, from financial planning, insurance, to also like nutrition and things like that. We got the book club where we pick one book each month and focus on like financial literacy or business development and our own
Right.
self-help, and just trying to just help people in every way that they prefer. So every medium, online, offline, really just trying to help them in simple, easy steps.
Okay. Yeah, yeah, man. And like I see all of this when I'm on WeChat, dude. And I look at it every now
Yeah.
and then. Like I'm in the group chats, but I don't I don't be like I'm not as active in the group chats just because like man I feel like I'm so busy because like I work at two schools and I be like man dude I want to respond but I always look because like I feel a couple months ago someone was like yo look at this stock blah 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 and I was like yeah I'm gonna look at that stock, and I showed it when bought some. I never really
Mm,
responded to anybody, but I did look at it. You know what I'm saying? So that's like it's a really helpful community that you created.
mm.
You know what I'm saying? Because like I may not be an active member of the community, but I do get the sort of I'm part of the ether kind of thing. Like
Yeah,
where
I'm
you
glad
know
to hear that. I'm glad to hear
I'm
that.
picking up on it. I'm picking up on things, man. So a lot of times in the group, I see you give advice. Like you said, you give like little financial advice, but a lot of times I see you giving advice about stocks and stuff like that. So I
Mm.
want to know, do you have like a certain expertise in stocks, or are you just sort of something that you're interested in?
Well, I don't want to confuse it as what I say in the group is personal financial advice. I really
Right.
because it's not.
It's
It's really just
let's just say
providing
your
no.
opinion. Yeah.
Yeah, it's really just like people ask me a question and I'll like
Yeah.
find articles or resources or educations about it,
Right.
or I talk about things that are interesting in general. Because as you say, uh, you are in the ether, but you might not, directly participate. But
Yeah.
outside of the group itself, I receive countless questions. What do you think about cannabis? What do you think about Chinese tech and things like that? So just in my own world, I just tend to share my own findings.
Okay.
So, and it's not necessarily saying I'm focused on stocks or bonds or property. I focus on wealth accumulation. So
Okay.
people who usually have like too much cash that or more cash than they should and want to put it to work. So that's my specialty. So just thinking like, oh, you have enough for emergency fund and you have this excess, what should you do with it? That's where my specialty comes in. So when I share stuff in the group, is really just to say, be as transparent as possible and just saying like, these aren't just things I'm investing in, but also like, hey, someone mentioned this a week or 2 months ago. I came across this. Here's some information. And really just to spark that or propel that, financial literacy, because so much of it is not just one and done. It's about that consistent exposure to financial news, assets, what companies are in the space and things like that. So that's how I would like to, present myself.
Yeah. I mean, I totally get that. Well, like as a person who, who probably knows, you definitely know more than me about the financial realm, stuff like that, and I'm pretty sure other people feel this way. When you actually have someone who works in finance, they definitely have to know more than you because they work in that industry. So when you say something, even if it's just your opinion, everyone's opinion is either right or wrong. People take it, and they take it, they do whatever they want with it, right, and stuff like that. So when I see you speak in the group, sometimes I go, oh man, like, maybe I should go look at that, what I'm saying? Because this dude is speaking, and stuff like that. So like that's kind of like what I was hinting towards, because like, it's first off, it's your group, so it kind of whenever you say something, people pay attention, just because it's your group and stuff like that. But as also because we're interested in what you're offering, that we also pay attention to it and stuff like that. I just want to pick your brain about like stocks and stuff like this in general. I mean, like, we saw because of COVID, stocks went way down, like back in the beginning of the year and stuff like that. And since then, sometimes they've gone up, and then sometimes they've gone back down, stuff like that. So, like, in your opinion, man, like, what are some plays people could be making right now?
People should not be making plays.
Okay.
I would keep it honest. Most people, everyday retailers, should be investing in honestly, I believe most retail investors should not invest in stocks, because it's what we call business risk, investment risk. If you're putting all of your money in a select few companies, that's extremely risky, because choosing stocks is super hard. Like, it's super hard, right? Even the Messiah himself, Warren Buffett, even he can get it wrong, right? So when you're just starting out, I'm a huge fan of funds, ETFs, and index funds, just because the group buying power, there's someone behind it, and you can diversify. Instead of like buying individual eggs, you can invest in the basket, which is things that I like to. So I would say that before you buy anything or any plays or anything you consider, ask yourself, am I willing to buy this? Or do I even trust in this company, this business for at least 5-10 years? Or is it just, I saw it in the group, or I saw it on CNBC, or I saw it on this newspaper, and I'm just like, oh, I can make a couple of dollars on this, on this $50 stock.
Okay.
So those are the biggest things I highly, highly encourage people to do, is be honest with yourself, because investing is not an end point. It's a consistent run, right? You should be thinking, like me, I'm in my 30s. I'm thinking I plan to be investing for the next 40 years, minimum, before I pass it down. So that's how I really want people to start thinking, like, think as long as you can think forward.
Absolutely. Yeah, I totally get that. I mean, like, I feel you on that. I ain't really made any plays since like February, but I'm always looking. But I'm always looking to see, like, what I'm saying, what's the next big play? Is it gonna be Uber this week, or is it gonna be like Lyft? Because they always going up and down. So like, can I pad my portfolio again? If I can get it at a nice little price or something like that. So like, that's something I'm always thinking about. I'm pretty sure other people are as well. But you may be absolutely right.
Well, to that point, what you just mentioned some good things, right?
Yeah.
Uber, Lyft, these startups. When I look at like individual companies, or say for example, okay, Uber. The first thing I look at is the management, who's running the company, and then I look at the P&L sheet. I look at the balance sheet. Is it making money, or is it on the road to profitability? And then I ask, do I have the time to wait for them to make money?
Mm.
You know, you look at a company like it took Amazon decades, you know, more than 10 years to turn a profit. Now, you know, it's Jeff Bezos, richest man in the world. But in 1998, where, you know, did you have the foresight or the stability to wait on that one company? So I'm a huge fan of like the funds, the ETFs, and index funds, because as you mentioned, you know, the market fell between March and April, you know, 6 weeks, fastest in history, 35%. But S&P 500 is above those same February highs already. So you could have, again, you could have picked one company, or if you put your money in the basket, you'd have been like, oh, I'm just waiting this out, because in the long term, you know, in 20 years, who cares about these drops if you're waiting 20 years, right? The market
Mm.
by nature is built to make money. It's built in nature to make money.
Right.
So unless we have a situation like the Great Depression, post the war, you know, we're in the Great Depression 7 years, which I don't foresee, but also I didn't foresee COVID. The idea is that we should not be, the bulk of your portfolio shouldn't be in individual horses, right? It should be, you know, you should be investing in a track. And that's just
Okay.
my foresight on that. Mhm.
Okay. I mean, okay, yeah, I totally understand that, but like, just say for example, like let's take one stock where like let's look at because I invested in Royal Caribbean, and you know
Mm.
Royal Caribbean before the virus it was like 100 and I think it was like $160 a share,
Yeah.
something like that, and then like at the peak of the coronavirus when it hit America, it was like it jumped down to like $23 a share. It was like, you know, like
Mm.
in my mind, I could be absolutely wrong, but in my mind, I'm going, dude, like this is a steal right now because you know you don't really know, but your feeling, your gut tells you that Royal Caribbean is going to go back to 106, at least 160, because like that was like the average what they were where they were at. Like that's what they averaged for like the last 3 to 4 years was about 160,
Mm.
150, you know. So they're gonna at least go back to that point. So why not invest in them? Yeah, it might take them it might take them a year, it might take them 2 years, but eventually gonna go back to that because that's what they've been averaging for the last years or so.
Mm. I can understand that, but also I look at it, you know, the cruise ships just like I look at the airlines. It's
Right.
extremely low margin business, and it could consolidate. So
Yeah.
that Caribbean could be another company. It could fold. It could be bought out by private equity and things like that. So when I look at equities, or if I look at companies, I like to look at things that I'm genuinely interested in,
Okay.
angles that I am significantly exposed to. So like out here, East Asia, China, middle class in Asia, you know, 66% of the world's millennials live in, you know, Asia. So you're looking at China, India, Indonesia, and things like that. So I'm looking
Mm-hmm.
at where is their true growth. So when I look at things like cruises are cool, but in Asia, or for me, I'm like, I don't know nobody my age going on cruises. But I do
Yeah.
know that people around here do travel because it's just a part of the lifestyle, you know, and also East Asia has, you know, the highest average holiday season, right? You
Right.
think about us out here in China, we have what, if you wanted to call it 10 weeks off per year, you know,
Yeah,
if
that's
you
about
really
right.
wanted to call it.
Yeah.
So, so if you took that down from a top down approach, I'd say what companies will benefit from that in
Mm-hmm.
its own sense, right? You think about, we had Golden Week, we had Chinese New Year, now we have Christmas coming up, we have summer holidays when the kids get out, we have, you know, Dragon Boat, we have Qingming Jie. So I try to look at those type of things, like what affects not just me, but what affects everyone, and
Mm-hmm.
who has the most potential or growth projections. So that's how I look at equities or just potential investments in
Okay.
general.
So yeah, you
Um,
you mentioned you mentioned you know how to look at a stock, but I want to ask you. I'm gonna see if can you be a little bit more in depth. So usually
mm,
how I do it, and I know this is wrong. I know this is
mm,
absolutely wrong. How I
mm,
usually look at a stock is one, I look at what they currently are. If this is my first time looking
mm,
at a stock, right? This is where I'm. This is kind of like my starting point, right? So let's say they're at $10, right? And
mm.
then I look backwards. So I look at their what do you call it? I look at the chart basically of what they've been doing
The
for the
moving
last,
average.
yeah, moving average from like the last 10 years or so. So, you know, um, if the chart tells me that, you know, they average about $10, every 4 or 5 months. But every 2 or 3 months they take a dip to like four, oh, $4 to $3. And for me, that feels like that might be a good buy. I just have to pay attention to when that drop starts, right? So like I learned something from like looking at like a company like Chevron, right? Where they're an oil company, and like they aren't really making no big plays. There aren't a lot of big plays to make with Chevron. But if you look at the chart, dude, every now and then they take a dip for a short time, and then they go right back up to where they're averaging, like and stuff like that. And so like those types of companies, right, where like maybe you need a lot of money to make money from it. But if you have the money to do it, I would think that maybe you should do it if you're paying attention to it enough.
Well, how can I say this? It depends on your strategy. I'm a buy and hold strategy. My strategy is buy and hold. For me, my clients, we buy and hold. I don't do plays or trades. We buy because I believe in a top-down approach. So from you're looking from a bottom-up. You look at a company, you look at the charts, you look at the analysis, and you just look at it from the ground up. I look from the sky down, right? So areas of growth, population, migration, emerging sectors, technology, middle class, growing, aging populations. And then I look at who is going to benefit from those sectors, from those countries. What's the infrastructure? Where are the politics? So I look from that perspective. So that's why I'm not a huge fan of choosing stocks as much as maybe ETFs or funds, because I can say I'm interested in, let's say, for example, I'm interested in Chinese tech, but I know that foreigners cannot own any A shares directly from the Shanghai Composite or the Shenzhen Composite or the Shanghai Star. But I do know that Fidelity has a China consumer mutual fund that has exposure to like Ping An Insurance and, JD and all these other companies that are also listed locally and globally. But it's satisfied that, okay, I want to get some exposure to China because from a top-down approach, this checks all the boxes. But also it provides a certain level of protection because I'm a foreigner, but I want to invest in dollars and not in RMB. So that's how I would look at it from a perspective of that. So it also depends on your strategy. It depends on your strategy. So for you, just looking at oils and commodities, it's very volatile when you think about if the Saudis turn on the pressure, they turn it off. Texas, if you think about right now, there is outside of China, there's global lockdown. So not only are no boats, no cargo planes are using the oil, now you have these surpluses. You have a place like China, which is just stacking oil for future use. And then you have places from, Nigeria, you have places in Venezuela who are huge producers, but no one to sell to. So things like oil, commodities aren't something that I'm educated or have the risk tolerance for. So when I look at anything, I'm looking at, do I believe in this equity, this asset, this investment for at least 5 to 10 years, at least. And if I can't say yes to that, then I'm like, maybe I'll come back to this after I satisfy that. And that's just my personal strategy with me and my clients.
Yeah, I'm glad you mentioned currency just like a few words ago. So like, one thing that like I've always been interested in is like, can a foreigner, if they wanted to, if they had the money, invest in stocks using the Chinese market?
No.
Why not?
It's a new system. It's not developed enough for foreign and retail investors. So China, as big as it is, the economy is still going through its growing pains, right? It's like a teenager.
Right.
So the stock market is doing a number of things, but they're still, how can you say it? When they set this plan up, I'm pretty sure even they are shocked to see how well it's doing. And with that, it comes a whole bunch of unanswered questions, unexpected problems, quality control. And that's why the opening up is a slow process. So that when they open it up, they have to do it incrementally so that they're not only overwhelmed, but they can manage it within reason. So you as a foreigner, you cannot invest directly into the Shanghai, Shenzhen markets. If you want to get some exposure to China, you can go to get a Hong Kong brokerage account, maybe like a Saxo Bank or maybe like a HSBC Hong Kong or things like that. But even with that, you have to hope that the companies are listed not only in Shanghai, but also in Hong Kong, the dual listings. So you mentioned a good point, right? Foreigners, again, the protection on the back end. There are plenty of investment companies, financial institutions who do funds and ETFs on China, but you don't have to invest directly. You can just invest through them. So at least they've done all the heavy lifting. You can just log into your brokerage account on your phone or etc. And you can just say, okay, I want to buy in some of that. I just think it's too early in the game for a foreigner retail investor to invest directly into A shares in China.
All right. So if I want to invest in up and coming Chinese companies, I should just wait until they get on the New York Stock Exchange.
Or a mutual fund.
Okay.
China Fidelity Consumer is a prime example, right? They have companies, local and international, who are investing or building businesses in China, that you can invest in. I try to tell people, like, why do you want to invest in China? Is it just because you see it on the news, or you see something that you really want to be a part of? There are plenty of, think about companies that are public that aren't in China, like Nike, Adidas, Under Armour. Think about education companies, who are not listed or are publicly listed on the New York Stock Exchange, FTSE, or whatever. So just think about, like, it doesn't have to necessarily be on the Shanghai or Shenzhen composite. It can be on the New York Stock Exchange, NASDAQ. It can be on the Euro stocks. It can be on a number of things, Hong Kong, Hang Seng. So I would just say, look at those and see if the companies are even listed at the same time.
Absolutely. And I'm just slightly moving away from stocks, man. And I don't want to hold you too much longer. We can.
Yeah.
We're both probably a little bit busy. Without giving too much of your bread and butter, because I know you do. You actually do give advice for as a means. Let's say, because you mentioned earlier, like a while back now, that you help out, that you try and give advice to people who have an excess flow of cash, right? When they have money that goes beyond their emergency fund and they don't know what to do with it, right? So, without saying too much, or what you would say privately when people are paying you, like with someone who has excess money, like what are the options?
Okay. Well, first you got to have the foundation is, if you're single, between 3 and 6 months of monthly expenses as an emergency fund. Right. Maybe you have a partner, married or a significant partner, you're living with them. You want 6 to 8 months. If you have a family, 10 to 12 months of cash liquid. From there, the options are, we can open up like a retirement plan, or we could do lump sums. We can do brokerage accounts. We can do property. I can do anything that's available in the market. But the main thing is that I do not pick I pick the investments, but I do not pick the goal. So for most people, if you say, hey, I have an extra $500 a month, I'm not going to come to you and say, hey, here's a plan for someone who has $5 million. I'm going to say, what is your situation? What are your goals? And what's the practical way to get there? Whether we're saving on a month-to-month basis, and we can look at like dollar cost averaging strategies, or if you just say, hey, I've been in China for 5 years and I got this lump sum, what can I do? And we can do like a one-time lump sum and just diversify that capital amongst a number of assets. So as long as you have access to the money and you are ready to have that conversation, working with me is anywhere from like a 60 to 90 day process before you can become a client, or even longer, because it's a mature thing and there's a lot of trust in that process. But the most important thing for me is that you have consistent income. Your taxes are paid out here, so that you have the free flexibility of the money, and just being mature enough to say, I am willing to put money away for 10 years plus. I'm not, today's Wednesday. It's not like, oh, today's Wednesday, I retire on Friday, help me out. It's like, no, we are thinking long-term, low to medium risk, slow and steady, beating inflation, and getting there the slow, but the more thorough way.
Okay, absolutely. And if this is possible, because the more I think about this question, the more I think it, the more silly I think it sounds, but I don't ask it anyway. Let's just say that this person or this, this couple, they don't have a lot of money, but they still want to, get a little bit of investment on here and there. Like, how could they go about that?
Well, if you want to sit with me, I can do like financial planning, right? Give you a plan,
Right.
let you work it out yourself. But if it's at a point, whereas if you don't have a lot of money, my first question is you need to save money not only for me, but for your own discipline, right?
Right. Right.
Because if you don't have any money, how can I expect you to save money for 20 years? If you can't
Mm-hmm.
save 200, 300, 400 bucks a month, how can I expect you to invest that for 20 years, 30 years? How can we, plan for your future if your history already presents and it's proven that you have no money discipline, right? So I would even entertain the question. We'd have like a sit down and maybe just do like some checkups. But until you can earn your right to invest, most times I don't take clients on.
Okay, absolutely, man. I totally understand that, dude. Like, you gotta have the money. You gotta be able to put that time in, or want to put the time in, want to put the work in, be mature enough. Yeah, that's totally
Mm,
understandable. Definitely understandable.
yeah.
Uh, at the end of the episode, man, I usually give my guests the last word, and then we end. So I'll give you the floor right now. You can say what you want to say, and then we'll end.
Okay. Thanks, Eric, for having me on. I would just say the one thing I would just say is that financial literacy is universal. It doesn't matter if you're old, foreigner, local, rich, poor. The ever flow or just a constant knowledge about learning with money, it just never ends. Because
Mm-hmm.
I put in this perspective, what's the purpose of living to be 100 if you don't have enough money to the end of the week? And
Mm-hmm.
what's the purpose of having all the money in the world if your health is so poor that you can't walk up the stairs? So that's like kind of the breath behind fit budgets, but also just my purpose out here. It's really just helping people, making sure that most people I believe don't want to be rich. They want to be comfortable. And if I can help them, feel free to reach out to me.
All right. All right, I lied. I got one more question.
Okay.
I want to know, I want to know, why are you so passionate about finance?
Because I wish someone would have taught me. So if I could teach somebody something that I don't know, that I know will compound tenfold to what I'm going to do with it, that's another form of generational wealth, generational wealth through knowledge.
Okay.
For people who look like me, I'm from the west side of Detroit. I went to public school. I went to a public university. I got my degree. I did all the check marks. I did everything. I did this, I did that. But it got me nowhere what I thought I was going to get.
Mm-hmm.
And then I look at the people who are just saying, you just got to get your money right. And no one taught me to get my money right. So now I'm at a point where it's like, I have to teach everybody else. If you get your money right, nothing else even matters on a tangible front, right?
Right, right,
So I
right.
really just want to just get the word like, hey, save money, save money, save money. Yeah, we live in a consumerist, capitalistic world, but even at the same time, the banks want you to save money. Your country wants you to save money because they don't want to take care of you later. But at the same time, I just want to tell people like, you don't have to be rich to save money. Just save,
Mm-hmm.
don't spend everything. And that's just
Right.
where it comes from. My lack of, I hope to just prevent other people from lacking it as well.
Mm-hmm. Absolutely. Well, thanks for those kind words, man. So, guys,
Yeah.
remember, I'm Eric Charles, and this is DeShawn, and this is the Blackboard Podcast.
I'm just on a mission. I'm trying to live my dreams.